All right, good afternoon, good morning, depending on where you are. This is Trinity John from Simpler Trading. Hope you all are doing very well. So we just flew in from Las Vegas. We were there from Tuesday all the way until just about an hour and a half ago. So I'm just getting in and getting squared away and ready to do the broad market analysis with you guys. If you came out and supported and you were part of the money show or you were there, it was great seeing you and or meeting you. I met a lot of amazing people, had a lot of amazing experiences. I'll be talking about those when I get into the room this week. So, we are going to be covering what I call the broad market analysis. Again, that's going to cover tonight with the futures from the 25th all the way into we get to start the 1st of March this week. So I'm very excited about that as well. Before we get started, a couple things that I just want to talk about that I think that are really important, and that is that you follow me out here on X. There's a lot of content that I bring out here as well. I just want to make sure before we get started that you're following the right person. So if you notice here, at Trendy John, TR3NDYJON, just pay attention. Make sure that it looks just like this. There's a lot of imposters out there. So again, please follow me there. Then go ahead and hit like on this video just to show your support. This is a free video that I send out. I've been doing this for many, many years. I love teaching, and I hope that it helps you in your journey in trading. Okay. And again, if you guys have any questions, you can also come out here on my X and just click right here for the link tree. You guys will see some amazing deals in there. Right now at Simpler Trading, we have a $7 trial. Just to come in and watch Melissa and I trade live. You get to watch our API alerts and all that fun stuff. So again, if you're not a member, just come out there, try us out, and see what you think. And if you don't like us, that's okay too. We just ask that you come in, and hopefully I'll be able to teach you something. Now, I just sent out, I want to remind everybody, we have the 2024 projections here in the room. And I want to make sure if you're a newer member that you take advantage of this because these things are working really, really well. Now, I sent out a couple of these out on X today. Don't forget, I put a video out there as well, the whole session that we did when we covered these charts and how we did these charts. These include the ES, the Dow, the RTY, the Nasdaq, Bitcoin futures, stocks, PayPal, CELH, BMY, SMH, which I'm pretty sure we probably have hit our 2024 projection. I'll have to go and look. XLF, IWM. Okay, and we may add into these after this quarter. Let's see how the quarter ends. Okay. All right, so the next thing is don't forget our Trinity room schedule. Everything is right here so that you guys understand when we're on in the morning. And then, all right, the BMA, everything that I'm covering right now, BMA stands for broad market analysis, is going to be right here. All right, so I'm going to start here. I'm going to pull over some charts. Just bear with me here. This is really straightforward because if you recall, news is a catalyst that pushes price into supply or demand. We identify that supply and demand before the markets get there. How we trade them is what I teach. Okay. I teach you how to find these zones. I show you how to use these zones to give you what I feel is a more Zen type of trade. Okay. So this week, why we need to understand what's coming out on economic reports and Fed speakers, because this is news that could push price into these zones that we find. All right. All it is just a catalyst. All right. Don't get worked up about numbers, depending on who you are. All right. The numbers, talk about the numbers. All of that stuff is noise for me. All right. I just want you to be aware when they are speaking so that you understand that volatility can come into the market. And one of my favorite things to do is actually speak during big reports such as like FOMC, or if you got Jerome coming on the mic, consumer confidence, maybe some PMI, CPI, things like that. Okay. Monday, new home sales. You guys can see right here. On new home sales, we have that coming out at 10 a.m. and these are Eastern time. And then on Tuesday, February the 27th, we have durable goods, S&P Case-Shiller Home Price Index, and consumer confidence. That'll usually bring a little bit of volatility into the market. And this one is always special because it starts at 10. And again, that's Eastern time. So that comes in about an hour and a half after the market opens. And a lot of traders will forget and then they'll kind of get stuck and they won't expect that volatility. So just make a note of it. On Wednesday, GDP first revision. Here we have advanced U.S. trade balance and goods, advanced retail inventories, advanced wholesale inventories. Atlanta Fed President Raphael Bostic is speaking. And why is this important? Because really, after this, I'm starting to notice that we have a lot of Fed heads speaking. Okay, again, just catalysts. Be aware that they will be in there. On Thursday, Friday Eve, we have initial jobless claims, personal income, PCE index, PCE, Chicago Business Barometer, PMI, and then again, all this area right in here, we have Fed speakers coming into the market. Then on Friday, we close out at ISM manufacturing, S&P US manufacturing, PMI, construction spending, consumer sentiment, Dallas Fed president, Fed president, Fed president, and you get the drift. So there's a little bit of noise out there in the market this week. And then we have earnings coming in. And some of my favorite names are actually reporting this week. I'm just going to zoom in. And the reason why I underline these are names that I could possibly trade my debit spread into. So I like to find supply and demand zones going into earnings, identifying those. And if it looks like it is worth a shot, then I'll trade debit spreads around that. If you guys want to check that out, again, you can see me do it live, or you can come in here and just check it out as well. So I have Zoom here, I have Workday, Robot. I have a long-term position on IRBT that I'm sitting in, pretty small. I mean, it's probably about $1,500. It is a leap, I believe, and again, only about $1,500 or so. So we'll see how this pans out. I'm not going to sell into earnings. If anything, I might do like a debit spread, or if the options are cheap, I might buy some in the money puts to protect some long term position there. Okay. Coming into Tuesday, we have NCLH, and then over here we have Kava. So I absolutely love Kava. I think this is one that you really should pay attention to this year. I've been saying that since early or mid last year, and they're doing really, really well. So keep your eyes there. I think fundamentals are going to look really good. Lowe's, LOW, just always interested. And then we have Baidu, Mara, and this is all on Wednesday. CRM, Snowflake. I definitely will be playing this into earnings, and especially CRM. Maybe some MARA. We'll find out if I want to do that. Best Buy, Okta. We have Celsius, one of my favorite names. Been preaching about this since last year. Great fundamentals, great chart. Everything's looking great. Partnerships with Pepsi, so forth. Just again, be looking at zones that most likely will be playing. Now, for some reason, I'll just make a quick note here on CELH. Once they did their forward split, right, and they got their partnership, basically what I've noticed with the chart is that it's hung around 50, and anytime it comes down to 50, it's been a buying opportunity. And for me, I'm just thinking about institutional ownership and be looking at that percentage and see if it changes over a period of time. I'm noticing that it is starting to increase, and it feels like that 50 level is a great opportunity. So if they sink it down into the 50, I'll probably be paying attention there for a new buy into CELH going into the next quarter. Next thing I got on here is Dell. Put some Zscaler on there just because. And we got Plug as well. There's an old name. And again, these are earnings happening this week. Let's go ahead and move down here. So last week's neutral results. And again, I'll bring you to a real chart here in a few minutes. But some of these I just like to show you what we have. Right here, you guys can see once I zoom in here, the neutral strategy worked very, very well. Now I was gone in Vegas, so I was not trading this or even watching it, to be honest with you. But I could see that the levels that I sent out over the weekend worked really well. We did get the short trigger, and it did pull back. It didn't quite hit our target here of that 493.24, but we did get a trendy turn signal, which is that indicator to let you know we could be looking for a nice push there, and we did get that nice push. So even if you didn't take the short, and if you've been listening to me, I'm more about buying the dip than I am trying to short. Because quite frankly, trying to hedge and do shorts here lately just haven't been a great profitable strategy, if you will. Now, I'm not saying we're not going to get short this week. We'll get into that a little bit later, but it has been a buy the dip scenario over and over and over. Okay. Anyways, what I want you to notice about this is once it did give you the trigger long, you hit T1, T2, and T3. We made a new high on the week. Over here on QQQ, same thing. If you got the short trigger, you went short, you hit T1, T2. We got a trendy turn signal. And then once you got the trigger long, we hit T1, T2, T3, all the way to the tick. You can see that also pulled back. We did make a new high as well. All right. Now, let's go ahead and get over here into our Thinkorswim really quick. This is going to be our SPY and QQQ neutral strategy. And if you've never watched my video on my neutral strategy, this is actually pretty neat. I use supply and demand. I use Fibonacci's, Fibonacci extensions if there's no supply above. And then I give you these zones. The neutral zone, just to kind of make it really easy for you to help you understand, is an area that I have found by using structure in the candles and some Fibonacci. And that is like a level that you really, most of the time, if you're not an aggressive trader, is where you want to stay neutral. Like, I really don't want to do anything in here because it's at a Fibonacci level or at a supply level in this case where we could just see resistance on a pop. And so I really don't want to do much here. If anything, I need to see on the SPY and the QQQ if bulls have an opportunity to actually push above those green levels this week. So on the SPY, that's $510. And over here on the QQQ, that's 438.42. Now, one thing I will point out a little bit later in the futures is that we're getting some topping wicks coming in. And these topping wicks, this one's not too bad. But the topping wicks typically tell me that there's bearish pressure here. And so what you look for are pops into the open session tomorrow. And if you I guess, reject, if you will, and not get a new pivot high. I like these kind of trades to sell call credit spreads on these, whether you want to do it on the SPX, the NDX, the SPY, the QQQ, ES futures, Nasdaq futures, Dow Jones futures, all that good stuff. Okay. So, again, I like the opportunity. If you're thinking to get short, why not try to sell some credit, right? That way, you could be wrong more than one way, if that makes any sense, and still make money. So if we just kind of pop up here, go sideways for a long time, then we're just going to kill that premium and be able to collect that premium. We did that last week when we sold put credit spreads on AMD. That was a beautiful trade that we covered. That was a really, really nice trade. And I want to do something like that possibly here tomorrow morning. So if we get a pop, we reject and we just make a lower high, then I want to go ahead and sell some credit spreads. And if I'm wrong, I can buy back the short side and stay long. So again, trigger longs, that green level, trigger short's going to be at the red levels. And you'll notice on these charts this week, I have a green zone. That is a demand zone or a trendy buy zone. So what I'm looking for is overall, it's a buy the dip scenario. But the question is, where do you want to buy that dip? I want to buy it where I'm seeing more explosive candles to the upside. And when I look over here, okay, to be fair, if you look at these candles, okay, they're not explosive. This candle is explosive. All right, so that tells me we have demand in this area. Trendy turn signals, demand zone. You can see it worked really, really well. So my zone is lower and the targets to the downside, we could find little pops off of that. But if we start to bid underneath or start to go ask underneath that cloud, especially on, I'm going to bring this over to a 4 hour. All right. So again, 4 hour charts. If for some reason we start to go underneath the cloud, not all the way under it, sorry. So not all the way under it, but just in it, then I would expect more selling pressure within the cloud. My overall sentiment in the SPY and the QQQ this week is that it's chop until it's not. All right. So the chop is going to happen in those neutral zones, and then we should get a clean break to either side once we break those levels. Okay. So again, that's SPY and QQQ. And then we are going to go ahead and roll down here. Now I'm going to bring up TradingView. All right, let's go ahead and pop this open. So this is the bigger picture. This is the SPY, and every candle represents 1 quarter. Now, what I love about TradingView is that they tell you how long we have until that quarter closes. So right here, it's 1 month and 3 days until the quarter closes. So that means everything that I'm teaching you, I'll give you notes every week, right? Just to kind of give you an idea of what's happened. But you'll see that the levels work really well. The coaching works very well. Support levels are spot on. The extension targets to the upside are spot on. And you'll notice that they'll kind of change week to week depending on what kind of move we get. Now, I do want to point out that the notes this week are really like straightforward, very easy. Looking for chop this week until it's not. Get bullish above the highs. The support this week is going to be between 487 and 472. And I understand we're all the way at 507. So this again is for the trader who's looking at the bigger picture, people that are positioned big for the year or whatever it may be. All I care about is what I'm teaching on this particular chart. Okay. So again, what happens on the 5, the 30 minutes, the dailies, all of that stuff, I'll report here, right? If it's important. But if the overall structure and the charts are looking great on the quarter, then I want to continue to just teach right off of the levels that you're seeing here. So let's kind of go over that really fast so you understand. These, again, are quarterly candles. Every time we come into the cloud, we're looking for a buying opportunity. So anything can happen out of left field, right? A catalyst could come in the market and anyone long could get smoked. And all of a sudden, you're seeing prices come back here. Now, I love those opportunities because again, I'm relying on the probabilities of just how well these indicators have been working on a higher time frame for many, many years. All right. So again, this is going to remain support for 2024 until I'm wrong. The next thing I'm going to tell you is we got this buy signal back here last quarter. We talked about that. And I was expecting new highs. Why? Because when you go back and test my signals, you'll see that we make new highs almost 90% of the time. All right. Now, the next thing is structure. We created what we call an inside and up formation. So this tells me in order for this to stay in inside and up formation, these continuation candles continue to the upside. And at some point, if we hit that rejection area or we start to turn, then this is going to be our new demand zone for 2024. So right now, this is a demand zone. All right. And it's not going to change. That is a demand zone. And when I use the Fibonacci's using last quarter and this current quarter, so my coefficients are anchored to that low and that high, I'm using the 23.6 and the 38.2 as my support. Okay. So again, that's all that is. So I'm using Fibonacci's here. And what's really cool is that the 618 or the golden Fibonacci level is right in line with the inside and up. So we have a lot of confluence here, guys. So a lot of confluence. If for some reason something weird happens this year, that's where I'm looking at definitely trying to buy that bounce. And if you think about it, if we were to drop in the SPY, let's just say, I don't know, about where we are, right? Around 505, 506, and we're to pull all the way back to 448, it'd feel like the end of the world for a lot of people. All right. But not for me, right? That's where my clearance rack is. That's where I want to be looking to buy. Okay. All right, let's go ahead and move on. We'll go into the Qs and take a look there. And again, the notes this week are pretty straightforward. Not a whole lot to talk about, but we'll come over here. New highs on Friday, but top and wicks are appearing up at these levels. So I'm thinking chop again on the Qs, the Nasdaq, and so forth. So bullish action above the 440.15 level. And what I'm doing is see this level here. These are the fib extensions we've had on, and we've hit a lot of our fib extensions. The reason why they may look different this week, not the numbers, but less lines, it's because I come into settings and I turn off. So we've already passed the 23. We've already passed the 38.2. So what I have on right now is the 50, the 78, and the 61.8. Okay. Then from here, I'm doing the same thing. I'm anchoring my Fibonacci's from the low to the high. And then I'm finding this area right in here. And this would be our support coming into the SPY, or sorry, in the QQQ. Okay. So right in there. And we're just going to put it right down there towards that 396 level. All right. Now, short-term support, looking at 417 by 403. And again, we would need to get up and over that 440 and some change of that higher high to start to see 447 and possibly 458. All right. All right. And bear with me as I get us back into our room here. There we go. And we're going to continue to move down. We're going to talk about, let's go ahead and talk about the dollar. All right, take a look at the dollar here. And that's going to be DXY. And we'll put it on here on the weekly. We did not look at this on the quarterly. Now, everything's worked out. And if you've been listening to me for many, many months or many years, then you know a lot of this stuff starts to be sort of repetitive because the levels work really well. But I want to make sure for anyone that's new that they understand that we created this supply zone like many moons ago, way before price got there. So we're actually able to identify the zone by structure, and that's what I teach. So when we come down into structure here and we expect to bounce, I'll tell you, hey, the dollar is going to rally. We expect it to resist here, and I expect it to basically sell off here. And that's exactly what happened. In October, the dollar hit supply. We sold off. Okay, the market rallied that entire time. We came down to demand. We pushed a little bit. We hit resistance. We pulled back. The market rallied more. And now the 618 or the golden Fibonacci level, very, very important. You'll notice that we can't get up and over that as of yet. So this is what we expected. This is what we've been talking about. And I keep saying this over and over. Really, if the dollar can't sustain price above the golden Fibonacci, then we're basically going to chop in the dollar. I believe we're going to chop in the market, especially this week. All right, until I'm wrong. All right, but it's looking really choppy. If for some reason the dollar starts to go below the cloud and the 50, right? So both of these, if that happens this week, then I expect the market to continue to rally to the upside. All right, so pretty special here, but just understand that the bigger moves, right? Market went up, it blasted up. Market started to get, it's still blasted up, but it got a little choppy in here. So you're basically between your equilibrium to a supply and demand zone. And when we get into equilibrium between those two zones, I expect chop into the market. All right. So maybe a great time to sell credit. Again, we'll know that by the end of next week. All right. Next thing I want to talk about is going to be the 10-year treasury or the TNX. Again, my forecast for the entire quarter, and I'll be right if we can hang in here for another month, is I told you we would look to bounce here, we'd look to reject here, and my overall sentiment was that the TNX would hang out between these two zones. And this just goes to show you the power of supply and demand. All you need is the zones. I actually got this question in Vegas. Somebody was asking me, like, how do I know if we're going to chop or if the market's going to cycle sideways? And this is a beautiful, beautiful way of understanding. You can put this on any sort of chart. And if your opposing zones are very close to each other, then you start to see a lot of chop. When there's a lot of separation between a supply zone and demand zone, then we look for bigger moves. And as soon as these start getting really tight, that's when we start, a lot of traders who are great at trading to the upside or just the downside, they have a really hard time in chop because chop leads to speculation. All right. All right, let's go ahead and move on. So again, the TNX, not much to worry about here. Again, this is just expected. If for some reason we start to bid above the 4.5 level, then things can get pretty ugly in the market. Most likely the dollar's bidding over the 618. Most likely the ES, Nasdaq, Dow, RTY, all that stuff's pulling back, right? So just understand that. Again, going into a choppy cycle here. Next one, we're going to look at the SKEW. Why is the SKEW important? If you don't know anything about the SKEW, please just type in Google, put SKEW stock market, and it'll give you a better understanding of it. Also, though, while I'm sitting here, let's see if I can find it really quick. I'm going to pull up. I'm going to try to find the video that John Carter covers when he was in Vegas many years ago. John Carter, Vegas. SKEW. Let's see if that comes up. That way I can kind of show you guys. Yep, it's right here. So this is what it looks like. There's John right there. All right, a little advertisement in there. Let's go ahead and skip this. This is it. So many, many, many years ago, right? But man, this is one of my favorite videos, guys. One of my favorite videos here. There's so much to learn in here. He talks about some personal stories and things like that, but he really talks and gets into detail about the SKEW. And what I did many years ago when I first watched this video, and this before I even knew John, is I said, man, I can really include this into my broad market analysis and really like just gives me that much more power to understand how the market is going to move from week to week, month to month, quarter to quarter, and so forth. So Again, I know you guys have heard this many times, but I have to go over this because I think it's a beautiful thing that you learn, right? So from 2021, I learned a lot because, matter of fact, I didn't think it was an easy year. I'm sure there's many people out there that say it was the best and easiest year ever. What I remember is that the market just kept moving up and up and up, and a lot of people had bearish sentiment, and that bearish sentiment kind of got into my blood as well, even though I'm not a bear. I'm a bull at heart, but it did feel kind of like this year and since October, really, that things that just keep exploding to the upside. But I needed to learn from it. And I said, I don't want that to happen to me again. So in 2021, when you study it, you'll notice that we just kind of stayed in a range. Now, historically, your red levels, if you will, like I could move, let's see, I can move this red level if I can click on it. See if I can get that. There you go. Now, historically, they would be, maybe somewhere in here would be really, really high up in this area, and then your green would be way down here, and it's really straightforward. When the skew starts to come up here, you're going to notice that the market's at highs, it's really bullish, and that the sentiment and the participants are on the call side. So what you're looking for is 60 to 90 days out on puts, right? And you're looking for the market to pull back, and then you want, for me being a bull, I really want these extreme levels. Now, you'll see this extreme level. This is when we had a 200-point day in the ES futures last year. That was an amazing day just to watch and see the excitement of the skew, really come to a test and work out very, very well. But this year, you have to take into consideration what 2021 did, right? And I caught on to it very quickly and I created new levels. All right. And basically, instead of us, and I still believe that we can see this year. And again, this is when we'll be at lows. The dollar will be flying. The TNX will be flying. There'll be a lot of scare tactics out there, maybe around the election and so forth. But again, that's where I want to be really, really like pressing the gas for a longer term long position. But they're doing it different. So to make this easy for you, this is typically where you get bearish, but the way that it's working is once we start to get in this nosebleed section around the 148 to 156, 160, this is where you want to look for your short term pullbacks. And then as we start to get right to the cusp, when everybody's honestly looking for that bigger move to the downside, we just keep bouncing. So even though it says protect risk off, what I've been trying to do is teach every single week is say, hey, let's buy the dip when we see the skew back down into here, and we want to be careful when the skew starts pointing up here toward these very high levels. Okay, so that's what we have going on in the skew. And far as this week is concerned, it's at 144. So you guys can see that 144 is pretty damn high, right? But it still has room. It loves to push up here and almost like just put a hurting on the bears. And then when they can't take it anymore, that's when we get that smaller pullback. And again, you could see that buying the put side is not really advantageous across the market itself. I'm not saying that there haven't been names that you can't short, but it's just the market has a lot of resilience right now. Okay. Let's go ahead and move down into our next, which is going to be the fear and greed. So we'll come over here and take a look at the fear and greed. All right, so the fear and greed is pointing at 78. It's 1 point up from last week. Basically, what this says, you can also come over here and watch a quick video on this site, which is really neat. And they tell you how they get the fear and greed. But the big thing for me to understand from here is that the majority of participants are on the call side. So they're just saying everybody's greedy. Everybody just wants to make money to the upside. Everybody's buying calls. Everybody's long. Max participants on the long side. So what happens when that happens? Well, you look for signs in the market that say, hey guys, we could get a potential pullback. Topping wicks, the skew's high, the dollar's looking like it's going to break out. The TNX is doing something like this, right? And you put all that together, and then we come up with the ideas week to week, right? The quarter charts are working very, very well, but the week to week is really where I find a lot of value in teaching and coaching in this market so that you can see in advance with the levels I'm going to show you here in a minute on the futures, where we want to get long, where we want to get short, and what the overall sentiment is like. And before I move on, don't forget, just like I taught in Vegas, I want to think like the market. I want to think like institutions. I don't want to be on the retail side. I want to line myself up with institutional buying and selling. And that's what supply and demand is all about. Okay. All right, let's go ahead and minimize this. We're going to come in here and go to our next chart, which is going to be the ES Futures Weekly. All right, so this is our weekly. This is our new chart. Only a couple things have changed here. Last week we said we could have an inside and down or inside and up. It did go inside and down, but you'll notice that we also talk about it's a buy the dip scenario. So even though we got the pullback, you got the trigger to go short. You could see that on the SPY as well on the neutral strategy. It didn't last very long. All right. Matter of fact, if you look at this, it maybe came into, I don't know, 80 to 90% pullback of the previous range. And then buyers came in, it came close to the 9 EMA. And now we have an inside and up formation. All right. So inside and up formations typically lead to further breakout. All right. So when does that further breakout happen? Like I was saying earlier in the SPY, we want to see highs. All right, we want to see new highs and a base established above that. Until then, it's chop until it's not. All right, extension targets to the upside 51.31, 51.71, 52.30. Everything I'm teaching on this chart is from a weekly standpoint. That means today is only Sunday. All right, and all the way until Friday, I need to see something. For example, if I say, hey guys, these typically lead to continuation candles, I don't know if that is accurate until Friday. All right. So if Friday ends up here, then overall my thesis is right. But you have to understand on the intraday, we're still going to trade what we see possibly or potentially off the smaller time frames I'm about to show you. As far as the weekly is concerned, your short-term support happens at 50.66 and 50.12. And then this longer term support that's been working really well for us is 49.30 by 48.42. Notice that the 9 EMA, is very important. It's also lined up with some previous demand, so there's a lot of confluence down there. If we were to break down to there, I'm a buyer down here. Okay, very straightforward. Let's move on. This is going to be your daily triggers. I change these almost every single week. This is a zone right here. I just wanted to point that out to you. You can put this on your own chart using it daily. But again, the 9 EMA, you can see that it's pretty in sync here with my buy trigger at 50.41. But that 50.41 is based on some Fibonacci there. And then we have our zone down here for our next buy trigger. And by the way, last week worked very, very well. So congratulations to you guys if you use those buy triggers. This week, I'm just taking my resistance level. I'm placing it right at my trendy edge. Like I said, it's chop until it's not. And once we can break up over here and create a base, then I think we could potentially move further to the upside. Okay. Triggers, let's just talk about them really quick. It doesn't mean there's aggressive versus conservative. Aggressive, look at the levels, all right? And let's say this is a very, to me, this is a very wide level. I don't know many people that want to take an ES mini and say, hey, I'm going to get in at 50.41 and put a stop at 49.79. I wouldn't expect anybody to do something like that. So I could be more aggressive with micros and scale in a zone, or I could be conservative, and when price gets here, then I'm looking for some sort of signal that I use on my chart, like the trendy turn signals. Okay, so price gets down there, I see a trendy turn signal on a smaller time frame, boom, I want to go long. Okay, 4 hour, let's talk about that really quick. So these are zones, and I like to repeat this because I think, if you're brand new and you come in here and listen to me, you think like, oh, he must have put this in afterwards. No, nope, 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 nope. These green zones were here way before price got there. Okay. And then as price pulls back, this is where we teach to buy. And what I mean is, okay, so if we were to go over here, okay, we created these zones when price made the structure, right? So I create the zone, and then we teach when price gets down here, just like I was showing you on the daily. All right, comes in here, you can be conservative, you can be aggressive, boom, you get the pop. Boom, you can be conservative, wait for the trendy turn signal, go long, boom, you get the pop. Now, and for this week, your resistance, again, everything I've been talking about is going to be in this range. There's a potential we could pull back into support this week around 50.60 all the way down to 5,000. Okay. Again, chop. Well, I should say this. When I say chop, it's chopped it down until we can make a new pivot high. That's like the overall sentiment that I get when I come into the market. Because again, these top and wicks here tell a big story. I still want to buy the dip, Just got to pick where you want to buy it. Do you want to buy it here in support? This is the better place for me if I want to take that stab to the upside. Okay, just so everybody understands. And then I have not done an intraday chart for tomorrow yet. I'll probably work on that here in a few. Let's go ahead and move to the Nasdaq. Same thing. I'm going to look at the weekly. Now, these things are really important, whether you trade futures or not. This really gives you the insight, what you need in order to trade the market. Because if I'm expecting the ES or the NASDAQ to go sideways to down, do you really want to be like deploying all your cash to the upside? Well, that's totally up to you, but not me, right? So this stuff really gives me the blueprint of what I want to do here. Okay. All right. So let's get over here and look at the weekly. So double inside, what that means is that the formations that I teach you, this is your mother candle, and then we have an inside candle and an inside candle. And again, you could go over to my YouTube page. I have quick 3-minute videos that teach you how to find these. This is called a double inside. All right. And from double inside, you could get a really explosive move inside and up or the inside and down. And you guys can see the levels to the upside. These are what I'm expecting for this week. If for some reason we do get up and over the inside and out formations, we could see 18,247 by 18,593. To the downside, I would expect if we went inside and down that you would see another attempt towards 17,631, the 9 EMA, which is currently around 17,550, and then down here towards 17,370. Okay. All right, so this is your daily blueprint, just like the ES, pretty straightforward. This is your resistance up here at 18,062, and then your trigger longs are 17,752 by 17,456. They're pretty far down there. The reason why they're wider than the ES or anything else that I put on is because of the leading aspect of the Nasdaq, right? So it tends to outperform, right, or underperform, and so you're going to have a little bit lower levels. They're still based off of structure and my trendy indicators. You can see those colored lines on the chart, like this purple here, this blue down here, and these yellows. Those are all finding me supply and demand based off of different time frames. Okay. All right, so over here on the 4-hour, this didn't really change. The only thing I changed, guys, is that I put, well, this supply zone is the same that I gave you last week. You can see that it worked really well. We broke back down, and we're in the cloud, so I'd expect chop. I do expect support around 17,755 by 17,663, and if we were to pull back into this explosive candle, I would expect buyers here. This is a relief rally. I want to talk about that right before I get off. Relief rally. Let's just say that we somehow trickle all the way down to here tomorrow or Tuesday. If we get a bounce here, I'm only expecting a relief rally. All right, relief rallies mean when the pop comes up, you're looking at somewhere between 23 to 38% of this measured move right here. And if I'm wrong, that's okay. I'm a bull by nature and we're going to buy down here, but relief rally until proven otherwise. The bigger moves come into the green zones, the smaller moves are at the support levels. All right. So once again, guys, if you appreciate these broad market analysis, I ask that you please give me a like. And I really appreciate you and your support. And thank you so much and hope to see you in the room. We'll see you for another full week starting tomorrow.